What's up everyone, it's Kani with MoneyVest. So in this video, we are going to be talking about cybersecurity stocks, and I've got 5 that I'm going to break down in both support, resistance, so technical analysis perspective, and also a little bit of fundamental analysis going over the valuations. I have a whole spreadsheet, so I'm planning on doing multiple sector analysis, similar to what I did for semiconductors, cybersecurity, another one for renewable energy and solar stocks, as well as crypto miners, and more videos on different subsectors within technology, whether it's cloud, AI, data science. So there's any specific sectors that you want me to do a complete full analysis on, let me know in the comment section down below. I've already done videos on, like I said, cybersecurity in the past, including semiconductors here more recently. This is another updated version of cybersecurity going over the technical analysis. And then in our future videos, like I said, I'm going to be doing more analysis on different sectors. Let me know in the comment section down below if you want any other potential industry that you want me to cover. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like, and that's all I'm asking in return is that you drop a like, of course, subscribe to the channel. Link to our Discord is going to be down below if you want to join, get access to all the trade alerts and trade ideas, including all the members only private videos, as well as all the Excel spreadsheets that are going to be moving over to our MoneyVest.com platform here very soon. So these are the 5 companies that we are looking at today. So we've got CrowdStrike, Palo Alto Networks, Zscaler, Fortinet, and OKTA. So this is really going to be the layout for most of our technical and fundamental analysis when I'm doing an aggregate sort of sector analysis, because it's very difficult for me to kind of break down every single financial metric for each of these companies, because there's over 70 plus MoneyVest metrics that we look at. And these are some of the ones that I think are kind of making up the majority of the industry when it comes to cybersecurity. So it becomes obviously a little bit more difficult and challenging to go over every single one of them in more detail. In these types of videos, I want to give you a more overview of these companies and where the technical levels are, where the RSI is, so you can have better, more informed decisions when it comes to trading opportunities, and also from a fundamental, more valuation perspective for these companies as well, and some of my notes that I've taken over here. So the layout's very simple. So we've got a support level, which is the more near-term support. Resistance, again, the more near-term resistance. We got the weekly RSI. We've got a very, very high, strong demand area for these companies that I've highlighted. And then, of course, we've got the valuation with respect to the price to earnings, price to sales, price to free cash flow, PEG ratio, and, of course, some of my notes over here as well. And then the average and the median for these companies. So starting with CrowdStrike, okay? So CrowdStrike, actually starting with Palo Alto Network. This right here is the chart on the weekly time frame. And what you'll notice is just an amazing run up here for the entire stock, of course, hitting new all-time highs of well over $378. Since then, we have seen a little bit of a pullback, which again is normal considering how much we rallied. And the next support level I've got for Palo Alto is going to be $209 per share. So $209.71, kind of in line with this previous resistance, also aligned with this support here that we validated for Palo Alto Network, and also aligned with some of these higher lows. And again, like I said, horizontal support. So that is a support level number 1, and a much stronger area of demand is going to be sitting at 135. Again, previous resistance, we kind of struggled to break out of that level, but eventually once we did break out over here, that previous resistance started acting as a very strong area of support. So huge area of demand here in the 135, and a very strong support at 209, and a resistance at $378, at those levels for Palo Alto. So again, looking at this 135, very strong area of demand, $209 near-term support, $370 resistance, and the weekly RSI at 47.9, so just under 48. So quite neutral, not overbought, not oversold. I would wait for Palo Alto Networks to at least come down to $209 per share, perhaps even lower. So we've already started to see that reversal, and it's already getting rejected. So I would wait for Palo Alto to kind of trade back down to low 200s before sort of jumping into this opportunity from a long trade perspective. You can see the RSI coming down. You can see the MACD crossing below that signal line. So this is a potential trade idea forming up, but we just got to be patient here. $209 is going to be that ideal level for a long entry, with a very tight stop sub $209, and the second opportunity is going to present itself at close to 135. That would perhaps be very, very ideal for Palo Alto. And then, of course, looking at the valuations here, 50.8 times earnings multiple with a price of sales at 11.5, perhaps one of the lower ones compared to CrowdStrike and, of course, Zscaler. And then price to free cash flow at 30, one of the lowest ones compared to the industry here. So average is around 40, and the median's at 35, and Palo Alto is trading at 30 times cash flow. So definitely a lot better valuation. However, the PEG ratio is higher. So earnings growth expectations are lower compared to the P multiple that it's trading at just over 50. So that does make it a little bit of an expensive and rich stock trading at a bit of a premium. So bottom line, my conclusion is tradable stock, potentially at our $209 support, down to $135 demand. RSI MACD coming down, so be patient with this stock. Let it come down to that prices. And fundamentally speaking, a little bit of an expensive stock trading at a bit of a premium compared to its earnings expectations. Now coming over to CrowdStrike, and this is a very, very overbought and overextended stock here with an RSI at well over 77. Very, very overbought MACD. And of course, the price itself has quite rallied here over 200%, done incredibly well in 2023 and of course so far in 2024. Massive resistance sitting at around $364, so that is going to be that resistance. Support, near-term support at $289, and I believe I've put together the actual demand area at closer to 165. So support at 291, that's going to be closer to 289, 291. So previous resistance potentially acting as a new support here. And the reason why I've put a very strong area of demand at 165 is because that, again, was a much stronger area of demand here. And after that, we haven't really seen any area acting as a strong area of support. Let me rephrase. So this right here, you'll notice stock got bought up here in the 160s. Stock got bought up here in the 160s. So twice, actually 3 times you could argue. I mean, it did drop to 140s here, but you could argue that multiple times we've seen the 160s, 150s area acting as a very strong area of demand for CrowdStrike. The reason why you see this 244 level here, the reason why you see this $206 level here is because they both acted as a previous resistance, right? So there's a difference. Technically speaking, all resistance levels tend to turn into new support levels, and all support levels tend to turn into new resistance levels. That's how the markets and the technical analysis works. But ideally, when you're looking for very, very strong areas of demand, you're going to be better off looking at areas of support and of course demand, as opposed to banking on the idea that all resistance will eventually turn into a support. So hope that kind of makes sense. So 244, 205, 206 are areas of support going forward, but they're not an area of demand, because ideally, in the past, we've seen areas of demand come in the 160s for CrowdStrike. That's where the buyers indeed stepped in, and we pushed higher here once, we pushed higher here twice, we pushed higher here 3 times. So hope that kind of makes sense. In the past, we've seen 160s as an area of demand as opposed to a strong area of support, which it already is. So that is going to be that level to watch. So 165 demand, 291 support. Even at 291 support, I would say CrowdStrike doesn't make for a good swing trade. I would say ideally at 244 or $206. So any of these 2 levels is where CrowdStrike would make for a better swing trading opportunity. And of course, 164, 165 would be perhaps the best, but not at the moment, considering how overbought the stock at the moment is. Now, coming over to valuations, I would say 82 times earnings multiple is one of the most expensive cybersecurity stocks here. In fact, the most expensive on the list here, almost 20 times sales. So this is not only a very overbought, overextended stock here, but even on a valuation basis, very, very expensive, very high. Price to cash flow is again the highest at almost 60, but the PEG ratio is low compared to Palo Alto Network, compared to even Fortinet, for example, which is trading at a much better valuation compared to CrowdStrike, but the PEG ratio is lower because earnings expectations are really, really high for CrowdStrike as it has turned the corner towards profitability. So we're working with a company that has a low PEG, high PE, and high price to sales. So this is very much a high growth stock. Depends on the type of investor that you are, but even at these levels, from a technical perspective, I would be cautious buying at these prices for CrowdStrike. I would allow for it to come down, cool off a little bit. Like Palo Alto is already on the way down, I would allow for CrowdStrike to also come down a little bit, pull back, see that correction, and for better prices to hit the tape before we start dollar cost averaging or buying into the stock again. So Zscaler, on the other hand here, also on its way down. Very similar to Palo Alto Network, as you'll notice in the past. Palo Alto is already on the way down. So is Zscaler already on the way down. So that's good. RSI very neutral at 48. MACD is crossing below that signal line, as you can see, and the price of 256 resistance here. Support level is going to stay put at 191. So again, very strong area of support for Zscaler at closer to $191 per share, which again is acting as a previous resistance for the stock at close to 191. Now, area of demand here once again, is going to be closer to $130 per share. So that's a much stronger area of demand. In the past, you'll notice that we validated this, we pushed higher from these levels, and this right here, once again, acting as an area of demand, we pushed higher, and there's the buyers that stepped in. Once again, third time we kind of validated that level before seeing lots of buyers step in. So always remember, the area of demand is always where the demand actually shows itself. It's not an area where the old resistance is now turning into a support. They can just be random areas of support here in the stock, but areas of demand come in when there's actual price action reversal, and that's exactly what we're here to kind of identify. So for Zscaler, we're looking at 127, 130s as an area of demand, 161 support, so that's exactly what I highlighted over here, 161 up to as much as 191 on a more near-term basis, but again, 161 better support than 191, and then we got a resistance at around $256. That's the most recent resistance. Neutral RSI, 77 PE, so that's the second highest next to CrowdStrike. 14 times sales, again, second highest. We got 50 times cash flow and not profitable. So profitability is a bit of a question mark for Zscaler at the moment. So that is something to keep in mind. Trading at a very high price to sales multiple, so I would allow it for to come down before there's opportunities for Zscaler also. Looking at Fortinet, now Fortinet probably one of the best priced stocks here among all cybersecurity, but at the same time trading at a bit of a higher PEG ratio because earnings expectations are quite low in the 20% range compared to the 40 times, 45 times P multiple that it trades at. So this is another stock that has been rallying higher. We had our fair value in the 40s, and since then it has recovered really well and done incredibly well, pushing back up to $73, $74. RSI also approaching those overbought levels at 64, 65. So this right here is going to be the analysis where Fortinet's got a very strong area of demand in the $41, $42 range. So you can see a couple times we bought back from those levels, buyers stepped in. Very strong support in the 90s. So this right here is support level at 90. Actually 53. Yeah, 53. I was looking at OKTA. $53 is going to be that support for Fortinet. So this right here, again, $53. Resistance at 73. That's exactly where the price is right now. So very, very simple analysis. Lots of consolidation sideways for Fortinet. So you'll notice that this is basically the price action where we have just been trading here with, of course, a resistance over here, very, very strong support over here, and an area of demand over here for Fortinet. So those right there are going to be some levels to watch. RSI, of course, at 65. So not a buy at this moment, considering how overbought and overextended it is. But from a valuation perspective, like I said, a far more reasonably priced stock, but a very high PEG ratio because of the low earnings per share growth expected for Fortinet. And finally, we come over to OKTA. And OKTA is also quite an interesting stock because lots of consolidation sideways here, sold off, broke down in 2022, consolidated sideways here, and then finally broke out after the earnings. RSI approaching almost 70, so a little bit of an overbought situation here. 66.50, lots of demand here, so you can see lots of times we kind of bounce off of that level. Support level in the $90 range and a resistance up to 113. That's exactly where the price is right now. And RSI at almost 70, so also overbought. So I would argue on a technical basis, we've got OKTA, Fortinet, and Crowd trading at very overbought levels at the moment. These two are quite neutral, I would say. So I would put them in a yellow. Let's just do a little bit of orange so it's readable. So orange, and nothing really is technically oversold at the moment. Palo Alto and Zscaler are coming down, and I would ideally be looking at this from a support and as low as the area of demand levels. Fundamentally speaking, I would say that, CrowdStrike makes the most sense even at a high price to earnings and price to sales multiple because it's got the highest growth rate. But that depends on the investor type you are. If you're not a high growth investor, because that does carry a lot of the risk, because, imagine if growth expectations slow down, then there's going to be a huge risk for that multiple compression for CrowdStrike. If you're looking for more safety, Fortinet is the clear choice, but at the same time, it is technically overbought here. So you got to wait. Technically speaking, you got to wait for all of them to come down and cool off a little bit because they're all very overbought, overextended. Some of them are on the way down, which is a good thing. But fundamentally speaking, of course, there's potential here for Fortinet for that slow growth. OKTA to turn the corner towards profitability very nice in a stable manner and start generating some good earnings. Zscaler needs to also turn profitable here. CrowdStrike trades at a very high multiple because it provides very high growth. And Palo Alto also profitable company, but has definitely a little bit of a higher PEG ratio, so at lower prices would make more sense. So hope you all enjoyed this video, and again, I'll be doing more analysis and more updates just like these on the entire sector. Let me know in the comment section down below, what do you think, and where you agree, where you disagree with my analysis here. Link's gonna be down below for you to join our Discord and our Patreon, and as always, happy investing. I'll see you all in the next video.